Welcome back to Strongman Personal Finance. We got a big event going on. VinFast, the stock that I covered before it IPO'd, is now publicly traded. And guess what? It's up 567%. Can this rally continue? Is this sustainable? Is this stock gonna index? Or is this a massive bubble that's going to inevitably pop? Well, let's look at some numbers and data. And let's see if this rise in this EV automaker based in Vietnam is actually legit. So, what is VinFast? Well, if you go and just Google VinFast, you see all these articles by all these different websites and, newspaper publishers. Oh, VinFast stock surge is a coin toss. It's the most valuable EV startup ever. VinFast shares rocket higher. Here's why, maybe reasons why investors are buying. You see all these articles that are basically hyping up this new company that's publicly traded, okay? I mean, they've been in business for a couple of years, but they're relatively new. So what do? They make electric vehicles, electric scooters, and they make buses, electric buses, that is. They used to make ICE vehicles, internal combustion engines, but they stopped that and pivoted very rapidly to manufacturing EVs. This is a Vietnamese-based company. And they have one factory in Vietnam with a max capacity of 300,000 vehicles. They also have plans to open up a second factory in North Kakalaki. As a matter of fact, I could probably drive down there. So why is this stock going crazy? I don't know. Now, if we look at their investor relations, we could see that one of the highlights, this is hilarious to me, one of the highlights in a recent investor presentation they made is they said, our stock went up a lot when it got listed on the NASDAQ. Okay. That's not something to brag about. Now, if you look at the market cap of this company, it's $159 billion. $159 billion. What has a smaller market cap than that? Ford, GM, basically a lot of other companies that are actually making money. So why does this company have a $159 billion market cap? I wonder why. Now, just to reiterate, this is still a new and developing company, okay? Like I said, they have a factory in Vietnam. You can see it on here. It's a little triangle. It's hard to see. And they're building a factory in North Kakalaki. And the rest of these places that they show on here are just their markets. Now, when I went and tried to order a car, because I'm totally not going to do that on their website, you can only currently get it in California, yay! In the United States. You can actually order a car and get it delivered to California, but nowhere else at the moment. Check out the pinned comment below and join our Discord community where you can ask me questions directly via text. And if you sign up for the highest tier, you can actually meet me in person every 2 weeks. So check out the pinned comment, join the Discord community, and let's make some money. This is a very immature electric vehicle car company. Now, like I said, they currently have one factory that has a maximum capacity of up to 300,000 EVs per year. Even Tesla can make way more cars than this, okay? But somehow this stock is shooting up massively. I just don't understand. As a matter of fact, if you go and pull up their financial statements, you notice some very interesting stuff. So as of March 31st, 2023, this is before the SPAC and before they got a huge infusion of capital. So, of course, the cash position, I'm sure, has changed massively since that event. These are in Vietnamese currency, by the way. Their financial position was not that good. So before the SPAC, they had 44, looks like trillion, whatever Vietnamese currency. And they had 83 of short-term debts. So their current assets were not enough to pay off their current liabilities. Very, very bad, okay? We look at their non-current or long-term assets, mostly in property, plant, equipment, basically their factory. 75 versus 87. So both from a liquidity standpoint and from a solvency standpoint, they're underwater massively. As a matter of fact, we can see, here's on the far right, the US conversion, we can see they've had total losses of $5.9 billion since this company has been in existence. Wow. As a matter of fact, they have $5.4 billion more of debt than assets. Now, like I said, this is going to change because now they're publicly traded. But what about their income statement? What's going on with their income statement? Well, we could see some of the amazing margins that they have in their vehicles. So here in the 3 months ended March 31st, 2023, so the first 3 months of 2023, they generated $65 million of sales denominated in US dollars. Look at the cost of the vehicle sold, $222 million. So they made 65 and they spent 222 on their vehicles. That means they're losing massive amounts of money on every vehicle they sell. Why? Because they probably don't have a lot of production and they have a lot of overhead because of their factories and they're building more. Well, those wouldn't be depreciated at that time, but they have a lot of overhead. Okay. Merchandise. So this is a very small part of their sales. Their merchandise, they don't make any money off of that. Costs of sales of spare parts and components, they actually make a little bit money from a gross profit standpoint before selling general administrative expenses, before interest and taxes. They make a little bit of money off of that. And then rendering of services, they also lose money massively. They made $3.1 million in the first 3 months of 2023, and they spent $7.3 million just on cost of goods sold, not even including other expenses. And then, of course, leases, $5.5 million. And they have negative gross margins on that. This is an insanely unprofitable company. And before you even factor in the margins, okay, all these amazing margins, look at their R&D. It's like 3 times their revenue. Their selling costs are almost as much as their revenue. Their admin expenses and selling costs combined are more than their revenue. This is insane, okay? Look at these finance costs. What are these? Is this interest? $98 million. Oh my God. Their total net loss for the period was $598 million on $83 million of revenue. Let's go look at their statement of cash flows if they have it on here. On their statement of cash flows, you can see that in 3 months for their core operations, they burned $811 million. Burned it. Gone. Okay? They spent an additional $259 million on investments, mostly purchasing property, plant, and equipment. They sold some. This is probably from their legacy ICE manufacturing that they stopped, and a little bit of collections on loans. But overall, they burned massive amounts of cash. But they did have cash inflows, look at that, of $1 billion from borrowing money. This is a clown stock, okay? I don't care if this stock is up 567%. If you are buying this company at a market cap of $159 billion, you're a clown, okay? You're just a gambling clown that has no business investing. I mean, price to sales of 252. What is wrong with you people? Stay away from this stock. I don't care if you bought it and it went up. This is a clown company. I don't think it's going to go bankrupt anytime soon because they had that SPAC, and that means they now have a ton of cash. But this is going to be like all those other companies, Hyliion, blah, blah, blah. They just burn cash and burn cash and burn cash. And then maybe one day in like 20,000 billion, they'll finally turn a profit. But in the meantime, you'll probably get diluted. That's it. What a freaking clown stock. Bro, it went up, bro. You don't understand, bro. Well, you be my guest. You do whatever you want. Good luck. Cheers.